For this video, I wanted to discuss restricted stock for S corporations. So when you think of restricted stock, you don't often think that this would occur in an S Corp context. Usually it's a Delaware C Corp that's taxed as a C Corp, and they're issuing stock options and other types of grants to their employees and founders. But restricted stock does exist for S Corps, and although it's not too common, it's important to know if you have any restricted stock issued and outstanding, because there is a question on the S Corp return, the Form 1120-S, that asks you to disclose this information. Right? So on the Form 1120-S in Schedule B, it very clearly asks, if at the end of the year, did the corporation have any outstanding shares of restricted stock? If yes, then you need to disclose the total shares of restricted stock and non-restricted stock that's outstanding. Now, if the question is no, and you just have non-restricted stock, which is what's the most common kind of fact pattern, then you just leave this question blank. You don't have to enter the number of non-restricted shares that are outstanding. It's only if you answer yes that you need to disclose both, right? So just some high-level background on restricted versus non-restricted for those that don't know. Restricted stock is granted to or purchased by employees or owners, officers, and they have restrictions on what you can do with the shares or when you get them, right? And so, for example, if John takes a new job with this company as a CFO, he's going to be paid a salary, but in addition to that, he's being granted 5 shares of company stock, and it doesn't vest until he's worked for the company for at least 3 years, right? So if John leaves before the 3-year vesting period, the shares go back to the company, and John walks away with no equity, right? So that's restricted shares, right? Because he's getting a grant, but the vesting is contingent upon him staying and working with the company for at least 3 years. Now, non-restricted stock, basically you take it and that's it, right? So Emily takes a position with ABC Company. She's got a cash salary, but then she's also being granted 10 shares of common stock in the S Corp. The stock has no restrictions, right? So there's no vesting period, no risk of forfeiture if Emily leaves. Because she has complete control over these shares, it's going to be non-restricted stock for federal tax purposes. Now, what's also important to remember is that the S Corp limitations still apply here, right? So S corporations can issue restricted stock, but it has to comply with all those rules that S corporations need to follow, right? So you can't have more than 100 shareholders. You can have only one class of stock, right? And then all of the shareholders have to be U.S. tax resident individuals. So you can't have any non-resident shareholders. You can't have any entities in there, no partnerships, no foreign corporations. None of these individuals or entities can be shareholders because they're not permitted shareholders under the S Corp regulations. And then last but not least here, for the restricted stock grants, shareholders can make 83B elections. So again, that's something that's commonly seen with C corporations, but S corporation shareholders can leverage this provision as well, right? If they receive a grant, they can make a Section 83B election to include the fair value in their income in the current period. And then when the shares vest, there's no income inclusion. And then ultimately, when they do sell the stock, they've got the capital gain treatment. So that covers it for restricted stock, S Corps. Fairly straightforward. Just it's another question on the return that needs to be answered and answered correctly. And then, of course, if you do have restricted shares, you're going to have to disclose how many shares are issued and outstanding. So thank you for watching. If you have any questions, please leave me a comment below. Happy to answer any I can. And I look forward to seeing you again on the next video. Thank you.